how to survive 7 to 8% mortgage interest rates regardless of what's going on. So right now we're seeing interest rates be at levels that we have not seen in the last 14 to 15 years, along with high or elevated home pricing. Buyers are on the fence as to whether they would like to continue renting or to purchase a home. The issue with them renting is rental rates are continuing to increase as well. Landlords are looking to sell their property. However, they don't know if they want to buy a house because they're seeing peak prices on housing and they're seeing high interest rates along with inflation. So they want to make sure they have the ability to pay for their mortgage as well as their expenses to actually live. So we have a solution called the 2-1 buy down. The 2-1 buy down is where you temporarily buy down your rate for 2 years. However, after the 2 years, it is fixed for the additional 28 years, not to be confused with an adjustable rate mortgage, better known as an ARM. So an example of a 2-1 buy down is, let's say the interest rate is 6.675%. So, and the house price is $550,000. The principal, interest, taxes, and insurance on that home is somewhere around $3,174.77. So the first year, your mortgage interest rate would be 4.625%, which would give you a monthly payment of $2,532.29, which is a $642.48 savings per month for that first year. When the second year kicks in, your interest rate is now at 5.625%, which gives you a monthly mortgage payment of $2,844.77. That is a savings during the second year of $329.83, which gives you a total savings over the course of the 2 years of $11,667.72. So you have the question, well, how can this be paid? This can be something paid by the seller as a portion of seller's concession. So seller's concessions are closing costs the seller agrees to pay for the buyer. So with seller's concessions, the buyer has the ability to ask the seller to pay a portion of their closing costs up to a certain percentage depending on the loan type. Example, for FHA and USDA loans, the buyer can ask the seller for up to 6% of the sales price as seller's concession. On VA loans, the buyer can ask for 4%. And on conventional loans, the buyer can ask the seller for up to 3%. So with that being said, what a point is for every $100,000 that you borrow, 1 point is $1,000. So by asking the seller for seller's concession, a portion can go to paying down on your closing costs as well as helping temporarily buy down the rate. Even if you have your own closing costs, you can ask the seller for seller's concession to help buy down the rate to help alleviate some of the cost over the course of the first 2 years. Essentially what they're doing is they're paying your mortgage payment, the difference for those 2 years, which goes back to the example. In this case that we're going over, the cost for the seller to pay to do the 2-1 buy down for you would have been $11,667.72. That is the cost to the seller. That is also the savings that you save over the course of those 2 years. So you're asking, why would the seller want to pay a portion of your mortgage payment? Well, it makes more sense for the seller to contribute to a temporary buy down so that they don't have to do a price reduction on their home. So if they decide to reduce the price $12,000, they could spend $11,667 to buy down your rate for those 2 years, yes, it saves them a little bit of money. However, it has a bigger and more lasting effect on your monthly mortgage payment than a $12,000 reduction. In hopes of saving you money over the course of 2 years, typically in a recession, interest rates go down. It looks like we're headed towards a recession, depending on how jobs losses are, the increase in interest rates by the feds. Typically in a recession, housing prices level off, as well as mortgage interest rates decreasing. So in 2 years, if mortgage rates have decreased, then you may have the ability to refinance out of that 6.625 interest rate and get a lower interest rate to help you save money over time. So with that being said, the first 2 years you've saved close to $12,000, and now interest rates are lower than what your fixed rate of 6.625 would be. So then you have the ability to potentially refinance and get a lower payment. The 2-1 buy down is a better option, has a longer lasting effect on your mortgage payment than a permanent buy down, which will adjust. You will have a lower interest rate, but the amount of money, dollar for dollar, the temporary buy down has a longer lasting effect, especially if interest rates go down. Remember, we're in the highest interest rates that we've had in the last 14 to 15 years. So we should see a decrease in rate within the next 2 years or so. So with the 2-1 buy down, when you qualify on the fixed interest rate. However, the first year your rate is 2% lower than the original rate, and then 1% lower, and then it goes to a fixed rate of 6.625 or whatever your rate is at the time. Once again, it's not an ARM, so that rate doesn't adjust. After that 2 years is fixed. I'll do a video here coming up soon on the difference between 2-1 buy down versus an ARM, and then I'll probably do 2-1 buy down versus a permanent buy down to show you the difference in those two programs. If you would like to see those, comment below and let me know which one you'd rather see first, whether it's the 2-1 buy down versus the ARM, or the 2-1 buy down versus a permanent buy down. I hope this video has been very helpful. The goal is to give you a glimmer of hope in this elevating real estate market. It's a tough and different real estate market. I am a home ownership advocate. I believe in ownership. I believe in home ownership. I think everyone who has the ability to own a home should. Do me a huge favor. If you thought that this video was helpful, give me a thumbs up, subscribe, push it out to your friends who are on the fence looking to purchase a home. Even if you have someone that's looking to sell a home, the 2-1 buy down can save them money or save you money. If you have any questions, definitely comment below. We also have a Facebook group. The link is below that you can join, where you can ask questions, be a part of our community. And I also have something for you, a free download of a first-time home buyer's guide, free to you just by downloading it. I'm Kevin Jefferson, the People's Lender, NMLS number 1433853. Have a good day.